is set. All engines go. Welcome to the angle. Let's start the show. Hold on tight. The stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. Today is the calm before the storm, everyone. The big day of nothingness, in my opinion. We'll see. But the big day of silence and quiet, some level of peace before a tornado of hellfire and brimstone will rain down upon us, whether you're a bull or whether you're a bear. Tomorrow, Thursday and Friday are bound to be very interesting. And for reasons why we spoke about on the program yesterday, and I will reiterate today, we are setting up for a very, very, very interesting time in the market. In case you haven't known, or you may not be aware, tomorrow is the FOMC meeting where essentially, as I've been saying on the stream, and part of my concern is that a 25 basis point cut has already been priced into the market, and Bessett, whatever his name is, just came out this morning and actually reaffirmed that and said that they believe a 25 basis point is actually, a cut is actually baked into the market already, which is some of the rhetoric I've been saying. So we're in a very interesting time where the market is expecting, or at least again, in my opinion, has been expecting a rate cut to come down the pike now. And now we're in the position of what will the market actually do when rates are actually cut. Now, if you look back at history and you look at all of the past times we've been in a rising rate environment, we move to a stagnant rate, like nothing's really happening, and then quickly move to a cutting rate environment, the market tends to have a very bullish reaction followed by some level of a bear market, not immediately after, but in the preceding future, in the next, whatever, I don't know the average, but 4 weeks, a month, 2 months, something like that, but very near-term future, after that pop on the rate cut, you tend to get some level of a bear market overall. So will this be different than other times in history? Because of the fact that we've already front ran that cut. Now that's the kind of question I posed to you today, and the kind of thing we'll explore a little bit later into the show as we go through the day and talk about what we're seeing live on the market right now. Now looking at the SPY in the pre-market right now, we actually broke a new all-time high. We actually gapped up and made a new all-time high in the pre-market early this morning at 662.65. Yesterday's all-time high during trading hours was tapped right here at 661.04. And currently we're looking to come down, almost touching it. We're kind of coming down to that general level here and trying to get a little bit of a move up prior to tapping that. But you're going to want to watch that yesterday all-time high, new all-time high, tap and see where we go from there. But looking at the market today, as I said yesterday, I really wasn't anticipating much price action yesterday, which I guess you got a little bit of a range later on in the day. You got a little bit of action. But overall, still not really expecting much of anything to happen on the market today. You're going to want to watch volume very closely, as I alluded to on yesterday's program, to kind of give you an idea of what your risk parameters should be on the day if you do decide to day trade. Now, as it pertains to swing positions, again, I will reiterate, you may want to exercise some level of caution just because of what this week is. Where you can de-risk a little bit prior to those events. Even if you're long equity, maybe consider tighter stops on certain names where you would still catch the meat of the move if it goes in your favor, but you don't necessarily eat a loss if things go strongly against your favor. And I'm saying bull or bear doesn't matter, but this is the kind of time where you want to start to strategize how you're going to handle the rest of the week. Remember, your goal is to exist. You want to continue to trade, you want to continue to be here, and you can't do those things if you don't have money, right? It's the only game, the only job, the only hobby, whatever in the world where you need more money to make more money, where that may not be the case with other things. And in this case, you may want to start to protect yourselves. If you're the kind of person who likes to hedge, you could hedge your positions. If you're the kind of person who just wants to be more defensive and go to cash, then maybe tighten up some stops, realize some gains, etc. Something to consider as you head into tomorrow, which is not only FOMC, but VIXpiration. And then we're rolling into OPEX at the end of the week as well. So in terms of market plumbing, you have two market plumbing events, and you have a large economic event. So those are the kinds of things that can really shake the market up and make it very difficult to trade, especially for novice traders. Now, as I like to do with you guys before the market opens, we take a peek at any potential catalyst coming down the pike today. And I don't believe there was anything. I looked in the pre-market earlier this morning, but sometimes things are added. So I'm going to take a quick peek right now and take a look and see if anything was added to the docket in terms of any potential news catalyst for the day. We do have industrial production month after month, which already came out while the show went live. Outside of that, you just really have the 20-year at 1 o'clock, but not too much. So this is definitely going to be, at least in my opinion, the calm before the storm once again. To add to tomorrow's fun, you have Trump visiting the UK. I don't know. That was not here this morning. That's here now. So Trump's visiting the UK. Anytime the president may start talking, which again, I guess he's talking right now. He must be live on some sort of news program because he's talking about Europe he's challenging Europe to stop buying oil from Russia and something about Zelensky is going to have to make a deal. So he's live somewhere right now. But anytime the president's talking, especially this president, you're going to want to pay attention because you never know what this guy's going to say and it could affect your bottom line. So take that with what it's worth. Looking around at the market, we already looked at SPY. Take a peek at the Qs, probably very similar, which it is. IWM actually bucking the trend a little bit. I mean, in terms of candlesticks, looking very similar, but red so far in the pre-market. In terms of volatility, we're pretty flat. We'll check back on this, obviously, as market opens, but volatility ended up cooling a little bit yesterday with the VVIX still continuing to rise a little bit, so we're obviously pricing in a potential for a VIX expansion into tomorrow's events, not only because it's a volatile event, but it's also VIXpiration, where those VIX contracts will expire. Looking at NVIDIA, nothing too crazy here. Had a decent move yesterday after that midday kind of consolidation, settled at the highs. Microsoft, really a nothing burger on the day thus far. Gapped up and kind of grinded down quite a bit, honestly, about $2. Apple right now, kind of sitting around this LOI at 336.85. Meta is very mute as well. Google, still pretty hot. Look at that candle yesterday. Oof. Still pretty hot. If you're trading open, we talked about this in the program. I'll keep highlighting this until the meme dies down. But again, if you are looking for a long, I made a video on this. You can go check out the video on my YouTube channel if you haven't already. But quick synopsis. Going to want to wait for this 8 EMA to catch up. I think a good entry where your risk to reward is balanced is going to be somewhere around this 814 area. Otherwise, I wouldn't touch this name. If you are someone who's trying to get in now, I would wait because of failure of this 814, you could get back to the sixes, and that's a big difference, especially from right now. You'd be eating a 30% loss. Not to mention, the options on this are very, very volatile. Can I get IV? Yeah, you got 230% at the money IV, which is actually even more volatile than it normally is. Average IV for this stock is around just shy of 200, so still 30 points or more, depending on which way you go on the chain. Higher IV than normal, with your IV percentile 87th percentile, meaning that only 13% of the time has IV been higher on open. So if you are an options trader, you're going to want to keep that in the back of your head that IV is extremely high on this name. Great environment to be a seller of contracts if that's more of your thing, but that comes with its own set of risk as well. Tesla obviously gapped up on the Elon Musk purchase, $1 billion purchase right now, looking for it to settle somewhere in between this 411 to 419 area, which right now it kind of is at right around 415. Looking for it to settle somewhere in the middle of this until tomorrow. Should get some level of a cool down. So we'll come back and we'll check that intraday. And lastly, Amazon, it's just sitting at the 80 MA. It's kind of grinding to the upside. Nothing. I don't love or hate the chart. It just is a very boring trade right now, so I'm not really too interested in looking at Amazon. Good morning, Eddie. Eddie dropping a good morning in the chat. Good morning to you, sir. I'm a little upset I didn't get a year this morning. Normally, Eddie comes in here with the year, but we'll take the good morning. It's all right. Appreciate the good morning. And if you guys haven't already, do me a quick favor. Got a little over 100 of you, still people trickling in. Going to ask you twice a stream, going to ask you once right now before the market opens. Do me a favor, wherever you are watching, whether it's on YouTube, X, Instagram, Kick, Twitch, and anywhere else in the universe I happen to be streaming. Do me a quick favor, interact with the stream in your favorite way, whether it's liking the stream, resharing it, dropping a comment, saying hi in the chat. Any sort of little bit of interaction helps me in the algorithm, which is all I'm really looking for. I'm not looking to charge you money, not looking to do anything. In fact, I'm trying to save you some money or even make some money while watching this program, learn something, and maybe have a laugh or two. So if you enjoy the program, you want to help support it, I'm just asking you for take a second, pop your phone out of your pocket. If you're at work, if you're watching on the computer, just say hi, whatever it may be. A little bit of interaction goes a long way. And if you haven't and you enjoy the program, pop over to my YouTube channel, hit subscribe. Once we get to 500 subscribers, this will be a daily show. So if you enjoy the show, maybe tell a friend who may be interested in finance, or if you are yourself not subscribed, pop over, hit the subscribe button. The cheap plug is in, everyone. We've got about a minute and 20 seconds to go. Hatchet dropping the good morning in the chat. Good morning, my friend. Thanks for popping by. Looking like we're going to open around the 662 level on SPY. Again, I'm anticipating a pretty tight range today. Now, I did say I was anticipating a tight range yesterday as well. And all things considered, let's see how right I was. Low a day was 659.35. High a day 661.04. Yeah, it's $2. Buck 70. It's pretty. It's okay. Not a great range for SPY. So I'm anticipating a tight range again, so we'll see how that works out. But mostly you could even see if you're trading intraday, if you're watching the market, the moves were very, boring. It was very, very, very slow, so you're going to want to watch that. We also are going to take a peek at the money IV when the market opens, kind of get an idea of if the market is pricing in a bigger move today, which we saw yesterday. That was our big hint. We looked at the money IV right at market open, and we noticed that it was at 10. Which is low for SPY. So when we see, that's a great barometer that you guys can use. Very simple thing. When you see at the money IV is very, very, very low, the market's not anticipating a big move either which way. Especially with 0 days, that's going to give you the idea for the day, right? 0 day contract expires that day. Versus tomorrow's contract, which is going to have higher IV, and Thursday's contract, which have higher IV because of the news events that are going on. So keep that in the back of your head. All right, here we go. Market is now open. Let's just see off the rip where IV should be its highest point right now. Let's see what IV is. 11%. 11 to 12%. Normal IV on the SPY, just so you guys understand, is right now average of about 14.99 in terms of IV percentile. So IV percentile is what you can use to determine how IV is right now in comparison to how it has been in the last rolling 52 weeks. So in terms of IV percentile, right now, SPY is trading at a in the 20% of IV percentile. So that means only 20% of the time IV was lower than it is right now, which means 80% of the time IV has been higher on the SPY. So that insinuates that volatility on the SPY should be much, much, much lower today, or at least has a higher probability of being a much, 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 much lower volatile day in general. Now, the only thing that works against this theory, where, not really against, let me pick my words better. The only thing that muddies the waters a little bit is the VIX right now. The VIX right now sitting at around 1567, where you could see a discrepancy between the VIX and between the SPY, where VIX could continue to climb into VIXpiration tomorrow, depending on how we see VVIX react, where we could see volatility as a tool, like the VIX specifically, climb, while SPY really goes kind of nowhere. So we'll keep an eye on that throughout the day. Negum dropping the good morning in the chat. Good morning, my friend. Thanks for popping by. Market getting close to wicking the pre-market low here, but not exactly. I'd be very careful if you do decide to trade SPY today. If you are, you're going to want to take trades that are trying to time the bottom and time the top, which for a lot of people is very hard. I would lean that way. I would also watch volume very, very closely. Like, this is already bad. I'm telling you guys right now, this is already telling me to stop. Unless I'm trading an individual name like Grab, which I'll catch you guys up on, that has some sort of momentum or something. Right at the open, the first candle, only 700K volume. That's very low for the SPY. Second candle, 364K. That's very, very, very low for the SPY, especially at market open. That is considerably low. So that is going to tell me that it's going to be a very slow, boring, dry day. Dull, dead, flat, unless you're trading a name with some news, some volume, some volatility. Majority of the market is going to be in neutral today, which, especially if you're like me, you're an options trader, that's your sign to do one of two things. Pick very, very carefully, meaning you're picking your entry very carefully, you're risking very carefully, or two, you don't trade at all. It's okay. I know there's this rhetoric that for some reason you must trade every single day, and you don't. There are some conditions that are better to trade in, and there's others that are not so good. So far, right, this can change. It's still very early. We're 3 minutes into the open. So far, this has the signs of a very dull, boring, flat day. Third candle, third 1 minute candle, 250K volume. This is not good. If you're looking to have fun today, if you're looking to trade options today, you need that volume behind these candles, because again, when we have lower volatility on the market, that what I use it for is a barometer of risk, because when there's fewer market participants in the market right now, that means there's a higher probability of price getting bullied around. I mean, look at these wicks here. Granted, we're at open still, but proving my point. When there's fewer people trading, the impact of a dollar is far greater when you're buying or when you're selling. So the impact on price is far greater when there's fewer people on both the bid and the ask side of things. So when you have periods of lower volume, you want to be especially careful, because something that may technically look good could get bullied out of its way, bullied out of, how do I say this? I say bullied out of the position, but could invert itself very quickly. And especially as you're trading options that are already lower liquidity than the stock, if the stock is already low liquidity, you could mostly theorize that the options chain will also be lower liquidity, which makes it harder for you to exit. Whether you're on the buy or the sell side, it makes it much, much, much harder, because for every buyer, there needs to be a seller. And guess what? If there's neither, you're stuck. And then you're going to have to either hit the bid or hit the ask to get out, and you're going to take a loss where normally maybe you wouldn't take as much of a loss. You're going to have to take a bigger loss or a smaller gain, whatever it may be, just because there's fewer people participating in the market. And again, these are all just things to consider from a risk standpoint. Looking at the volume, as we're still pouring in 270 on that candle, 229. So volume, your VMA is starting to decline already in the first 5 minutes. Let's actually go back in time here. All right, we got 5 minutes of data. We almost have 5 minutes of data. I want to look at what the 5 minute volume for this open is, and then we're going to go back to last week and just see if there's a big discrepancy or not. Because typically, at least when I'm looking at things, and maybe I have a little bit of a bias just because I'm assuming today is going to be a dull day. That's why I'm trying to check my bias right now. Typically, when I see volume like this, especially price action like this at the open, that tells me hard breaks don't do anything kind of day. So we're going to see right now Let this candle close out. We'll get our 5-minute volume data. I want to go back to last week and maybe another week and just kind of get an idea of if volume is around this at open and I have a bias, or I'm right and volume is very low. All right, there's our 5-minute close. So we're going to encompass the last 5 minutes, the first 5 minutes of the open, which has 1 million or 1.8 million in volume. So let's look at yesterday, which also should be relatively low, but let's just do a quick comparison. So yesterday had 400K more. Let's go back to last Friday. Actually, last Friday was even lower at 1.6. Let's look at another last Thursday on 9/11. That was even lower. Wednesday was at 2.6. 1.4. Okay, so maybe I'm wrong. This is why I'm checking my bias right now. Because it looks, maybe it's just because the price action looks tight. But I guess this volume is actually kind of expected or standard on SPY for the first 5 minutes. So maybe the price action just makes me think like we're at. But yeah, this is actually pretty in the middle in terms of volume on the open. In comparison to recent times is what I'm trying to say. Not historic, but like the last 5, however many days we just checked out here. So it's actually not too low. It's not as low as I thought it was, I guess I should say. So that's why, especially when I notice I have some level of a bias, so I'm leaning, not even more bearish or bullish, but I feel a certain way, and I feel like this looks like it's low volume, maybe just because of how wicky it is. I check myself. So that was a good example of how I keep myself in check. I was wrong. That's why I checked myself. So this is actually pretty standard. It's somewhere in the middle. So we saw some opens were a little hotter, some were a little cooler. This is somewhere in the middle. Watch this back test of the 661.04, which was yesterday's high. So we'll see. I might take a stab on it. It's just there's not a lot of meat on the bone here. You potentially have about 50 cents of upside if we get back to open. 50 cents of upside at a 662 call. Right now trading a 33-cent delta, which gives me roughly 17 cents in profit. If I'm trading at about 50 cents, that's not worth it. That means I might make whatever that is. I'm going to break the calculator out. 67. It's like a 30% gain, which is great, but it's on a 0 day, and we're at the open. Yeah, you can even see the high day was 78 on the 0. So typically, I would take the bounce here for calls, but I'm not going to because the risk to reward is not good. The potential is not there, I guess I should say, to make a lot of money. And obviously, this could just fail. I don't think it's going to fail, but it could. Let's actually take a peek at tomorrow's chain, because I believe, obviously, we should see a little bit more volatility on tomorrow's chain. A little bit, but not by much. 14, 15, but not by much, which is interesting to see. Interesting. So we're going to keep an eye on the SPY right now. Then we're going to pop around to our sectors and see where the strength and weakness could potentially be. Like I said, if you were to take a stab on SPY and you really, really, really want to trade right now, potentially a long opportunity could come here, but I would wait for confirmation. Grab right now. Back test it. Look, remember I told you guys 591? What was the low a day on Grab so far? To the penny. 591. Telling you, as long as it closes this week over 591, this thing's looking good. Good. Now, yesterday we didn't get, in the pre-market we did, or in the close last night, got all the way to 630, which is fantastic. But yesterday we didn't get enough where we were just about there. We're like 616. Like I said, around 623, 625-ish is when I'd start expecting there to be some level of delta hedging. So far, has not been the case. We've not been up that high while the market's been open. So there's been no need to delta hedge yet, I should say. SPY's trying real hard here. We're going to watch the volume and kind of see if anything changes in terms of volume today as well. Because like I said, I'm not really anticipating a big move either which way today. But big moves can happen on low volume. Testing the 200 MA on the 5 minute here and below the LOI. So you got a little bit of a sandwich here. So we'll wait and see what happens on the market. Oh, you might break the 200. Bears may attack. Let's take a peek at our sectors real quick. And I'm sorry if I'm a little low energy. I'm going to try to hype myself up again, but I had a killer leg workout and I'm very tired, so I will try to hype myself up a little bit more, wake you guys up, because this is a morning show. I'm supposed to be your coffee in some regard, so as I hope you guys feel jazzed, and it does not help that the market looks like a snooze fest so far. Anyway, utilities down a little bit. Energy is not too bad, actually. Nice move up from the open. Getting a little bit of a pullback now. Consumer staples, a little bit of a bump up here. Tech gapped up and coming down. Looks like it's trying to put in some level of reversal. Real estate flat, materials flat, industrials flat, healthcare flat. Healthcare had a pop and retraced it though. Banks are not looking fantastic on the day, intraday. Consumer discretionary, gap up, grind down, and comm services down. So actually, most of the sectors right now are leaning more bearish than bullish. Just from looking at how their candles are forming out on the open so far, which makes sense. The market has dumped since the open, essentially. Got a little pop and moved down. But this isn't necessarily stoked defensive posturing to me, especially because everything is like moving down. Like, granted, things may have moved up, but if you're looking at the trend as a whole, most things, with the exception of tech is looking like it's trying to get a rally here. Most things are slowly kind of grinding to the downside. So it could be some risk-off behavior, perhaps. It's definitely a possibility. Let's see. But so far, it's looking like tech is holding okay. NVIDIA moved down, popped right back up. Oof, Microsoft getting a little bit of a steep fall here. Apple... I really don't anticipate it moving really far off this LOI. I could be wrong on that. But it would make a lot of sense for it to chill here, or at least in between this range. That's another $3-4 higher, so it could have that opportunity, but really kind of hug this until tomorrow. Meta looks like it's trying to find some feet here. It's trying to find its feet on wobbly legs. Google down, open down. Tesla, like I said, I don't anticipate Tesla really to go too far either today. Some level of consolidation between the 411 and this 419 area, which seems wide, but it's also $400 stock. So kind of hugging above this 411.61, which only about 20 cents off low a day, so not too shabby there yet. But kind of floating around in here. You notice volatility starting to climb to the upside, and the VVIX is also going up. So it looks like we're getting a move on volatility into Vixpiration. Interesting. Sorry, just checking something on my second screen here. Don't really think we'll get a big volatility move. If anything, that's going to come tomorrow, which for obvious reasons. But in terms of like specifically the VIX, I'm not anticipating a big move on the VIX specifically. So it's in a good sweet spot. Like, it doesn't want to be under 14. Clearly, every time it gets down there, it comes back up pretty quick. But for like the bulls to be happy with this VIX right now, around like a 15 to 16 VIX is not awful. If you still want to be, like, again, cautiously bullish, like I've been saying on this program, it's not awful. Let's check our 5-minute volume on SPY. Might be getting a little stop ratey here. Decent volume still in the 5-minute on SPY. Now, it would make a lot of sense. People have put in stops before the event, and they're getting yoinked out of them here. So, it's looking like we are going to get some range on the SPY today, which I like, because that means I can do my job. But for now, I'm not touching it. We're getting a little bit of range. We're at about almost $2 a range on the SPY today. Let's see. In a perfect world, where's the SPY come down to today? If we're going to get some level of retracement, here's the daily chart. Let's zoom in a bit. Let's see where the SPY goes today. Zoom in. Enhance, enhance, enhance. Okay. In here. Right in here is like the sweet spot in my opinion. Between 658.33 and 659.11. So if the bears do attack, meaning the bears are going to try to pull this down even more, I'd look for either reversal or consolidation here, or we could even close down here. But it would hold this zone here. That's going to also allow these EMAs to try to catch up because you've been moving pretty good the last 5 days on the SPY. But getting in this zone right here, 658.33 to 659.11, wouldn't be awful. Now, it's going to leave a gnarly candle encompassing yesterday's entire candle. That's going to be a very big bearish engulfing candle. Depending on the volume, that may not be great. But if the worst case scenario did happen today on SPY, we would get down to there. Now, your best case scenario, if the bears do get aggressive, is that you get down to here in this zone, you build a base, and then come back up and close higher. That would leave you a pretty gnarly hammer candle potentially, or some other kind of candle where we're wicking that area of liquidity, soaking up more liquidity, and closing even higher at the highs. That would be a very interesting trade to me. So for me today on SPY, if I am taking a SPY trade, I'm going to watch down here. This is what has my interest. I don't think it's going to happen, but it could. And I am astonished that volume is actually keeping itself together so far today. So far, so good. Like, people are trading today. Not that people wouldn't be trading at all, but typically people are more hands-off. So it looks like people are more hands-on. Let's see. That's a nice wick, Microsoft. Where are we on the daily? Ooh. Don't hate that, Microsoft. Might take a stab on Microsoft here. I'm looking at the 515s for Microsoft. I don't know yet. This is one of those things where if I wait too long, I'm going to miss it. But I'm also not too confident on pulling the trigger. And when I feel like that, I don't like to pull the trigger. Here, I'll say it like this. With a 70% degree of confidence, I think we're going to get a bump back up on Microsoft. Typically, when I take a trade, I want at least a 90% degree of confidence where I know, yep, this is going to reverse or whatever, and I pull the trigger. But the way this is looking right now, I don't feel confident enough to pull the trigger on a trade. It looks like it, but there's a little voice in the back of my head saying, don't do it. And when that little voice is telling me not to do it, I listen to the little voice. So even if I miss some money here and I miss out on an opportunity, it's okay. But there's obviously a reason why that little voice in the back of my head is saying, don't do it. So I'm not going to. I will wait. How's NVIDIA looking? This daily on NVIDIA, I'm kind of consolidating here on lowering volume. You left kind of an island bottom down here on the daily. So an island bottom is where you leave a gap to both sides of a period of price consolidation. And typically an island bottom is a bullish reversal, especially when you're above all your short-term EMAs here. The only thing I don't love about this is that the volume's been slowly moving down. Now, I guess there's a counterpoint to that where the only reason it looks like the VMA is dropping is because volume was higher right here where we rejected. So I guess if I'm nulling that out, volume is actually pretty standard on NVIDIA. So this might be a nice island bottom here. I like NVIDIA today. If we sweep the lows again on NVIDIA and go a little bit lower, depending on where SPY's sitting, so maybe even if you want to use whole numbers, here, let's actually see. Yeah, take a stabber on the 50 MA today if we get it. 174.85. So like 175, like even whole number. And we talked about why when we're looking at the options chain. 175 is where I'd consider a long on NVIDIA today. Might take a stab on NVIDIA around 175. If that happens, I'd probably look at the... I'll go one strikeout, probably at the 177.5s. Or I might go at the money. It kind of depends. Maybe I'll go at the money because I'll be a little bit less risky. I don't know. We'll see. We'll feel it out. Volatility staying pretty flat right now. Climbing, but nothing too crazy. You did just get a drop there. As I said, it's climbing. You had a quick gap up on VIX intraday. Let's see if SPY goes in that zone. So actually, that's going to be my trigger essentially. If when SPY gets all the way down here in this zone, I want to consider a long on SPY, and then I also want to consider that long on NVIDIA if we're there at the same time on both of those. That'd be actually a pretty good sign to me that we're going to sweep down a little bit and then look to reverse. If we do get a little bit of a volatility pop, I don't anticipate it to be, I don't anticipate it to stick, essentially. I think UVXY doesn't want to be over 1125-ish, 1127. So you might get a little bit of a bop here. A pop in volatility as a whole, but which would make sense if the market falls, right? Not a one-to-one relationship, but very close. So these things make sense, but it's not where I would be concerned by any measure. I would use that or view that as a dip buy opportunity. So far, the little voice in the back of my head on Microsoft was correct. The little voice told me not to buy calls. I did not buy calls. And so far, the little voice in the back of my head saved me money. Listen to your gut. Ooh, Apple got a push. Apple pushing to the upside right now as the rest of the market looks a little shaky. Like I said, I anticipate to stay in between this range. So, essentially, staying sub 240.29. So it's only got about $1 of gas left in the tank. Decent markup, though. I have news. News. Price upgrade here 14 minutes ago. Was that it? 14 minutes ago? What was that? Yeah, that could be it. Oh, that's tempting. If we tap this level, it's very tempting to take an intraday short here on Apple. It's very tempting. Especially when all the other tech looks kind of weak and it's looking like SPY is going to pull down into that zone. I know, shorting the strength, but you guys know me. Sometimes I take the ballsy trade. Tesla moving up here. Again, I anticipate Tesla to stay in between this zone. So I don't really expect it going outside of the zone. But basically staying around here. How much are 240 puts? About $2. 250. What do we open at? Let's go in the money. I'm gonna look at the 237.5s. Let's keep an eye on these. Not yet, but I'm eyeballing. If we leave like 2 or 3 wicks up here, then I'm gonna consider getting in. Apple. Liquidity is a little iffy. It's not horrible. There you go, bulls. Pop it one more time. One more bullish pop there. Got about $1 here on Nvidia still. Remember, I'm looking for an entry around 175, high 174. Come on, Apple. A little bit higher. Tinsy bit. Tinsy wincy bit. I prefer to take a bull position, so I don't really want to take a bear position, but I do like shorting upgrades. When the opportunity presents it, when you get a harsh move up like this. Now, it could just bust through this. That's why I'm being very patient here. I'm not opening the short now and waiting. I'm waiting to see when the bulls stop, because they might just keep going. And in which case, that's good for them. Keep going, bulls. Make your money. So watch the reaction here at the 240.29. And we'll see if we get anything out of it here. Leaving a little bit of a wick before that, or looking like we could be leaving a wick before that. Contracts are currently trading at 139. Low of the day was 138. At open, these were around 270. High of the day, these contracts was 291. So it doesn't mean they'll be back at that level, but look at that volume there on that candle. So that's why I want to wait. That's good volume here by the bulls to push it even higher. I do like shorting like sharp moves like this. Okay, we're tapping the LOI now. So now there should be some level of resistance, especially with that high right here at 241.32. So you only got $1 left on the table here if it wants to try to tap that high. So we're going to see. We should leave a wick here. But it's a matter of how the volume looks as we're pushing it. If we don't leave a wick, this thing might just push for that recent high. It's iffy. Left a little bit of a wick. So if we leave another wick or another 2 wicks here, that'll be my sign of getting short. Otherwise, you're stepping in front of a steamroller right now, so you don't want to do that. Don't want to do that necessarily. SPY is still kind of grinding lower, but this Apple movement is really putting the market on its back, at least near term here. Good thing that little voice in the back of my head told me not to take Microsoft calls, right? Always listen to yourself. All right, now I'm going to get short on Apple here. All right, I'm short on Apple right here at 132 average. That's the 237.5 puts for the end of this week. So, and if you're following along, you would get a better fill than me. So we'll see what happens here. Looking like if we do get a pullback, so if this move sells off to some degree, it would come down to right around here at this 238.60-ish level. There is a possibility this moves up higher, like I said, on the daily to that recent high of 241.32. If that breaks, that's my cut point. So that's the risk here. You got about $1 both ways. But you got a little bit more downside potential off of a move like this, in my opinion. So I prefer the downside potential here, as I stated. But we'll just see. So I'm in on the 237.5s for this week at a $1.32 fill. And we'll see where we go with that. You guys know, in general, I'm very picky when I take a bear position, specifically on the market. But in general, I don't, what's the word I'm looking for? I don't lightly take a bear position. It's not something I like to do. I'd prefer being a bull, because being a bull is a lot easier. A lot easier to be a bull. It's way harder to be a bear. If you disagree in chat, you'll learn one day. So up again, a little bit of a pop here. Let's see if we leave another wick behind or two. It's looking like momentum is clearly slowing here. Volume is starting to taper with the exception of that one pop we had about 4 or 5 minutes ago. So we're just going to wait and see if we get a sell underneath this LOI. There should be a decent pull to the downside. Getting around to my price target, let's see. Right around here. 949. This isn't going to be exact, but be about $1.80 a contract. So about $60 to the upside. It's not bad. But like I said, your risk to reward here is basically 1-to-1. You're about $1 both ways with potential for lower based on how the market's sitting today. So it's good risk to reward. It's just a matter of waiting and seeing. Apple is grinding higher, almost to that localized high that we talked about. So that was this 140-132, which is again my risk point here. So we will see if it rejects out of the gate here. Or if the bulls will hold it together. Quick little rejection here. We could backtest the LOI and bounce. So as a bear, I want to watch that as a potential to take a walk on the trade as well. But again, I'm looking for a deeper pull underneath that LOI, which is the blue line on my chart. Pop back to the market right now. Market at 660, just swept beneath that a little bit. It's looking like we're going to get in this zone today, guys. It's looking like we're going to get down here. That's where the long opportunity is, in my opinion, especially because of where Apple is right now, and it's putting the market on its back, all things considered, because Microsoft's pretty weak. NVIDIA's not that strong right now. Meta gave up a little bit here as well. Google has been needing some level of retracement. And Tesla is at the top of its range. So you have Tesla at the top of its range, or at least I'm expecting its range to be today. You have Apple near the top of what is like my risk point on a short. So really, all things considered, with the other Mag 7 kind of sitting in a very tentative spot where they're probably going to drop lower, and the two that are holding up the SPY are sitting much, basically at the extent of what I'm looking at as a near-term move. You're more than likely going to see a little bit more of a bear pull here on SPY. Again, down to in this zone of 158 to 659. You're getting a little bit of activity up here on Apple, wicking yet a big wick down and pushing near the highs here. But you're leaving 3 wicks so far, so that's not a good sign. Unless the bulls can break it here. They break it by a few pennies. So it's still alive. Again, that local high is 0.32. I'm currently underwater on that position. I'm under a little bit, but again, we're still within my risk parameters on the trade. We're still within what I'm looking for here in general. And if when this turns south, it will turn south very quickly. And more than likely, like I said, be a sharper fall. As I like to tell people, bulls take escalators, bears take elevators. Bull moves tend to be and bear moves tend to be the bottom falls out and you drop pretty quick. Tend to be. Not always the case, but that's typically what we see from both the bull and the bear perspective. Guys, do me a favor if you haven't already. Asked you twice a stream. I'm going to ask you once again right now, wherever you're watching from, whether it's on YouTube, Instagram, X, wherever you are, do me a quick favor and interact with the stream. Drop a like. Follow me if you haven't followed me. Subscribe if you haven't subscribed. Wherever you are, if you're enjoying the content, do me a favor and interact with the stream some way. It's a little way that you could help me in the algorithm get this to more ears and eyeballs, even though I appreciate all your ears and eyeballs that are listening and hearing me right now. If you haven't already, also, I did mention subscribing. Pop over to my YouTube channel, hit the subscribe button. Once we get to 500 subscribers, this will be an every single day show. So if you enjoy the content, you want some free education, a little bit more entertainment in the morning, and possibly make you some money and prevent you from losing some, then all you got to do is hit that subscribe button, tell a friend, and I appreciate your support. I know the energy is a little lower today. Like I said, I'm a little, a little exhausted, and I promise you I'm trying to hit the gas as much as I can with my energy, and I'm probably going to need a nap after this because I'm that tired. But I'm trying to keep the liveliness, the energy up. It's a Tuesday morning. We should be hyped because it's Tuesday. But it is a very, I mean, even this price action is very dull. Like, we are just kind of slowly grinding to the downside. It's not exciting, right? All right, Apple now getting a push back to that LOI. Near my entry, around 127 a contract now. You're going to want to watch, like I said before, what I'm looking at from a risk perspective. If we leave a wick like this on the LOI and we continue to push here, that's also going to be my idea to cut. Because we've back tested that resistance as now support, and now we're continuing to move. However, if we close this candle lower and we kind of make a lower high and we test it again, that could be a sign that a harder break could be coming, especially when you have this green SAR here that's looming. So if we consolidate lower and we move on this LOI and start to hug it more, then you're more than likely going to get a harsher break to the downside. And again, my price target is roughly around like 238.80-ish. So about $2 here. For context, at its current price, these contracts are around 118. Now, assuming zero delta appreciation, so the most conservative way I can calculate this, delta on these contracts right now is about 30 cents. So that would put this contract roughly at a value of 180 or $1.80 off of my entry. It would still give you a 37% gain. So, like I said, very good risk to reward here just to get to my first price target here. And again, I don't really anticipate it going much lower than this either. So I would fully close out down here. So if we tap my first price target, I'll probably take a lot off, go to runners, and then close my runners here at the low of day, or tighten up stops real tight and just kind of let it drop more, if it is going to drop more, I should say. Yeah, the market's just kind of playing around here while NVIDIA's... It's trending bearish, but it's trying to turn around. Microsoft is definitely trending bearish. And Apple, like I said, has put the market on its back. Meta flat. Google definitely trending bearish. And like I said to you guys before, Tesla's in this range right now. About 30 cents off of the high? Or the high of the range that I'm anticipating it to be. So expect Tesla kind of to chill somewhere in the middle here. Unless we get another news event or something to pop that. And Amazon pretty range bound also. So we're not seeing too much either which way. As I say, Amazon's range bound. I got a nice little candle there. Last 3 candles actually not too bad if you caught a little play there. Good on you. Let's keep a tight eye on Apple. Right now you got this POC here as well. That POC is 240.65. So if we get under that POC especially. So this actually in this scenario reaffirms my short. Although we are slightly above it, you're seeing volume at the high. So that can be a bullish or a bearish thing. Volume at the highs can be a bullish thing if we're continuing to move higher, right? Volume at the highs can also be a bearish thing, or I'm saying at least this volume profile at the highs, because people are looking to sell, right? Oh, I made money here. I went all the way to the top. Okay, get out, sell everything, sell everything, sell everything. Big pop on the volume profile when you break a key technical level. Again, this 240.29, you should yoink, as I like to say, back down to the downside. So watch this very, very, very closely, especially this green SAR that's about to break here. And as I said, you want to look and see if we make a higher low. I'm sorry, a lower high, which we made another lower high here on these last 2 1-minute candles. So we're looking to see if there is any potential follow through here or not. Now, if this move doesn't happen in like the next 5 minutes or so, that's also going to be a sign for me to walk. I don't mind getting consolidation here and then a pull down. But you never want to overstay your welcome in a bear position. And when you can make money in a bear position, you want to make your money and get the hell out of the way. Because typically the money that you make as a bear is a lot faster, like I said. So we're going to wait and see. Like I said, give it 5 more minutes. If we don't break this LOI in the next 5 minutes, wherever the contract's at, I will take a walk. Either it's small gain, small loss, whatever it is. But that's from a risk perspective that I don't want to overstay my welcome here. Those contracts are trading at 125. So it's marginally a little bit under my entry here. Nothing too crazy. But you're noticing here on the 1 minute candles, we're leaving wicks behind. Every time the bulls are trying to push it up. Here, we'll zoom in a bit. Wick, wick, wick. So, and we did just break the SAR here. So like I said, 5 minutes. So we'll give it to 10:15. If we're not underneath this LOI by 10:15, that's going to be a closeout for me, regardless of where it is. But it's looking like if volume can come in here, especially underneath that POC, and we break that LOI, we're going to wash, like I said, at least $1, $2. You should be able to hit around $1.80 on these contracts, like realistically. That's not really a far fetch here, a far cry. All right, tapping the LOI here. That's your first back test. Well, I guess you call it the second because we did tap it here. So your second test here, which is what I said, if you want to rewind the tape 5 minutes ago, you could see a consolidation here. We kind of float around, tap it a few times before breaking it. So this isn't a bad thing. It's actually a really good thing. Meanwhile, SPY is grinding lower. We still got another $1 to go on SPY to the downside here. So that supports the thesis in terms of sentiment, right? The market isn't bullish right now, so that's good. If I'm taking a bear move on one of the more bullish names on the day, taking a bear move, I want to make sure sentiment is working in my favor as well. That the market in general is moving a little bit lower to the downside rather than the upside. Okay, we're still underneath the POC here. It's looking like we might get our third tap here. You had good volume though on that last candle in comparison to the last few candles, but you left a wick and closed higher. So that could be a sign that I may want to exit. We're not there yet. So this is very, 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 very tight risk here, where I see a bull and a bear case both ways. As I said, you got about 3 minutes here. One way or the other in the next 3 minutes. 10:15. And sometimes I'll do this with a trade where I'll put like a time expiration on it, because that holds me accountable as well, where I'm looking at things realistically and going, it's more than likely going to do this by this frame of time. And if it takes too long, I also want to get the hell out of the way because it's taking too much time to do a very basic thing. All right, we are trying to break the LOI here. We'll see if there's any follow through. We're at my entry as well, so we're just sitting right like where I entered on the LOI. Whoa! Buyers trying to step in here, still under the POC. Got 2 minutes still left, so we'll see what happens here. But it's looking like the bulls aren't going to let this one sink. That's what it looks like. Now, I could change here literally in a minute, but so far, that's what that looks like right now on this volume. You broke the LOI, you pushed up on higher volume so far. So basically, this candle here is going to determine if this move sticks or not. I don't like being quiet. I hate dead air so much. So I'm going to go sooner than later today. I mean, normally I close up shop anytime between now and the next like 30 minutes. So I'd like to see this trade through with you guys. That's why I said I wanted to give it to like 10:15, which is right here. This isn't really a convincing move for me on the bull side of things though either. I will give it literally 1 more minute. Because you could break the red star here and push to the upside. You're on the POC. It is very indecisive. Very indecisive. Oh, you're toying with my emotions. Ooh, I just got an eBay alert. Why did I get an eBay alert? Pop over to eBay real quick. All right, so we talked about eBay. This is a point where it's like good risk to reward. It's at the 50 MA here. You could put a stop on at like 87.49. On the daily here on eBay, this isn't awful. If you want to put a real tight stop here on equity, I might personally take this position. I'm going to wait and see. I'll wait till like midday. But keep an eye on eBay here. Again, risking the gap. So it's the low of this candle, 87.48. So you put a stop on like 87.30, something like that. Give yourself a little breathing room. But you could have a really tight risk to reward here on eBay. Keep an eye on that. All right, back to Apple. Apple, 1 minute. Oh, God. All right, I'm still going to wait. We're leaving wicks. We're adjusting on the fly. Because we're still, we made a, we kind of double topped this little mini range. You could call this inverse head and shoulders. You know what? I'll actually close it out. Oh, I hate feeling this way. The indecisiveness. I'm going to wait. I'm going to wait. The market's trying to get a reversal here. Oh, God. All right, maybe I'll just take a little, I'll take a little baby haircut. What's that, 15 bucks? See, now my gut's doing the other thing where it's telling me, I'm not trying to move the goalpost, but my gut's telling me wait. Normally my gut is very right. Very, very right. So I want to listen to my gut in this scenario. But I think I'm going to listen to my heart. Oh. These contracts are at 117, so it's not even like the percentage loss or anything. Like, it's not even down that bad. It's just a matter of like, all right, I'm going to close them out. I don't need the emotional torment. Is what it is. That was a real paper cut. That was not much. Now, obviously, it could still work out. I'm just not liking it because, again, when I'm a bear, if I don't see a move pretty quick, this was the opportunity right here on the 1013 candle for the bears to sink it. And that candle right here, this engulfing candle right after at 1014, definitely a strong inkling that they're going to try to reverse it. These wicks up here, a few minutes later, indicating to me that price action is a little weaker, especially on this volume, is not fantastic. Which was making me be like, I should wait a little longer. But ultimately, at looking at the grander picture here, the fact that the bears tapped and failed to break that LOI and had a big buyback on higher volume, it's just not worth it. It's not great risk to reward for me. So I'll take a little baby L on Apple, and we'll call that quits there. That's okay. Could be way worse, and this thing could still pop, you know, still could go. The other thing I was looking at is that the market, while still in a bear trend, was trying to put in some level of reversal. So how do I say this? You never want to pee into the wind, right? Because if you pee into the wind, you get pee all over yourself. Okay. So you want to pee with the wind, right? So when the market is trending more bearish, I tend to look for bear positions. When the market is trending more bullish, I tend to look for more bull positions. So in this scenario, if I'm shorting the hot bullish name that's holding up the market right now, and the market's bearish and the market starts to go bullish, that could support a theory of a reversal here on that name, which is why I wanted to get out of the way. So It's just a matter of managing your risk now. Like I said, it could still work out. It's just not worth it either which way. With that being said, I think I'm going to wrap things up. Not even that early. A little early. Earlier than I normally do because I'm really tired and I'm hungry and I need to take a nap or something at some point. So I got to take care of myself. Anyway, hope you guys enjoyed the stream. I know this one was a little lower energy and I hate coming on live when I have not a lot to say, the market's boring, or I'm low energy. So sorry the energy was a little low today, or if it felt low. The energy will be back tentatively on Thursday. Tentatively. We're looking to do another stream on Thursday. I will put out a message when that does happen, or when that is officially planned. So tentatively, keep that in the back of your head, 9:15 in the morning on Thursday. I should be back here, barring something that's completely out of my control. I don't know. If that thing that's out of my control happens, then I will not be here. Mainly because when I do a live with you guys, I like to be focused. I like to make sure that I'm talking to you guys, putting on some level of a show, right? Being some level of entertaining and not boring and silent. So if I cannot provide a show to you, I will not go live because I have a lot of pride and want to put out a good product. And I swear if Apple breaks down now, I'm salty. I'm salty. I'm not going to chase it. I'm not going to chase it. But there's some salt. There's some level of salt in my veins. If Apple just kind of breaks down here. I might take another short anyway. I might do it. I'll wait. It's okay. Let me not second guess it. I'm going to go. Enjoy the rest of your day, guys. Don't forget tomorrow's FOMC. And please, please, please trade responsibly if you trade more today or into tomorrow. As you saw today, I took a trade where I had a little bit of a loss, but manage your risk. Keep things very tight if you are going to trade. Like I said, that was a tiny little haircut. It was like, whatever, 10, 15 bucks. But be a little bit more tighter with your risk than you normally may be. And take those trades that make a lot of sense. Like this case, Apple coming up to this LOI after a hard move. Good spot to short. Wasn't a bad idea. You want to take those trades that make a lot of sense. So consider that with your trading for the rest of the day. And I will see you guys tentatively next Thursday. Some will tell you you may need an edge to trade. Well, I like to look at things from a different angle. And that's always what you guys will get right here on the Atomcash angle. Have a great rest of your day, guys. And remember, precision beats prediction every damn time.
The time has passed, and that's a wrap. You're on